Welcome to Informed Investor. Asian Paints, India's largest paint manufacturer, has recently announced its financial results for the third quarter of fiscal year 25, revealing significant challenges that have led to a decline in its share price. Shares of Asian Paints have tumbled down 3% today, and if you see the last 6 months, it doesn't paint any good picture either. Over the last 6 months time frame, shares have declined 26%, reflecting investor concerns over the company's future. So stay tuned till the end to know it all. To start off, let's do a quick overview. Asian Paints is a household name in India, synonymous with vibrant colors and quality paints. But beyond the familiar paint cans lies a robust and diversified business that has painted its way to becoming a dominant player in the Indian and international paint markets. Asian Paints was incorporated in 1942 as a small trading company dealing in paints and allied products. Over the decades, the company has grown exponentially, expanding its product portfolio, manufacturing facilities, and geographical reach. In fact, it is ranked among the top 8 coating companies in the world with a turnover of 354 billion rupees. Asian Paints categorizes its offerings into several key segments. Firstly, decorative paints. This is the largest segment, comprising interior and exterior wall paints, wood finishes, and metal finishes. The company continuously innovates within this space, introducing new products like anti-rust coatings and environmentally friendly options. Next is industrial business, where it provides high-quality, custom formulated products for the automotive and industrial businesses. Although this segment contributes a smaller percentage to overall revenue, around 6%, it is crucial for diversifying the company's portfolio. In addition to paints, Asian Paints has expanded into home decor solutions, including wallpapers, wooden flooring, and light fittings. This diversification aligns with its vision of being a comprehensive home improvement brand. Asian Paints also has an international presence, operating in Asia, Africa, and the Middle East. Now let's jump into the recently announced Q3 results. In the third quarter of fiscal 25, the company's revenue from operations declined 6% to rupees 8,549 crore as compared to the 9,103 crore in the same quarter last year on the back of subdued growth in the domestic decorative segment. The operating profit saw a significant drop of 20%, leading to an EBITDA margin contraction of 350 basis points to 19.1%. Coming to the bottom line, Asian Paints reported a 23% drop in its net profit at rupees 1,128 crore for the quarter, hit by weak festive season demand. Now, what exactly is happening with Asian Paints? The company witnessed a decline across various business segments. In the overall coating business in India, which generates more than 90% of revenues, it witnessed 1.7% growth in volume and a 6.6% decline in value. Weak festive demand following an overall muted consumer sentiment impacted volumes, which further impacted the value growth. In context, the third quarter is known to be a healthy demand season, as the festive season traditionally boosts sales during this period. The company's profitability was further affected by higher sales and distribution expenses, coupled with an adverse product mix that did not favor high-margin products. Although there were sequential improvements in operating margins, these factors contributed to overall weaker profitability compared to previous periods. Now the competitive landscape has intensified, with rival companies expanding their operations and aggressively targeting market share. One of the biggest disruptions is Grasim Industries stepping into the sector with its paint brand, Birla Opus, backed by the Aditya Birla Group. Apart from that, even JSW Paints entering the scene is putting pressure on the established market leaders like Asian Paints. Following the recent earnings report, several brokerage firms have reassessed their outlook on Asian Paints. Nuvama Institutional Equities cut its target price from 3,185 to 3,000 rupees and reduced EPS estimates for fiscal year 26 and fiscal year 27 due to weak demand outlook. Morgan Stanley, on the other hand, maintained an underweight rating with a target price of 2,358, citing concerns over competitive intensity and demand recovery. Lastly, Jefferies has the lowest price target at 2,000 rupees with an underperformed rating, expecting margins to remain under pressure. In fact, several brokerages continue to remain cautious on Asian Paints following the results. Now, what about the road ahead for Asian Paints? Asian Paints is navigating a tricky demand environment, with urban markets facing some stress. The management has mentioned that they remain cautiously optimistic about a recovery in the coming quarters. Additionally, the management is focusing and banking on rural resilience, brand strength, and industrial growth. Going forward, Factors such as urbanization, infrastructure development, and an increase in repainting cycles are expected to drive demand for the paint products. Asian Paint's ability to innovate and adapt to changing market dynamics will be crucial in maintaining its leadership position in the industry. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.